part of the reason our inflation is starting to look good is because everything was so bad this time last year, right? So to say we're only up 4%, 4.3% this March compared to last March. Well, remember, last March was when things started to go crazy, like in every respect. Yeah. So next month being, when the April figures come out, we're going to look really good again by comparison.
The shit was really high last time.
So to be like, oh, we're only up 4.3%. It's like, well, because this time last year we had gone up 8.3%. So really compared to 2021, we're still up 12%. It's still bad, but it's just ballistic. It's bad at a slower pace. Be like, oh, I only gained 1 pound this year because I gained 20 last year. Like, is that good? Like, it's
95% less than last year.
When I was broke, I had rich habits. When I was broke, I had rich habits.
Live from Costa Rica, our boy Neal. The sun is for sunshine. The Neal is for Neal. Neal, what's going on?
Not too much. I'm hiding out.
Of course, it's immediately you cut out there, so we're off to just a phenomenal start here.
Is it super choppy?
It's in and out. I like how your face will just freeze at like a great moment. Hopefully,
we're gonna put a picture up for me instead.
Yeah,
I think that's gonna be the play.
Listen, we got to keep some of this great content off the top because it's fantastic. Listen, check this out, Neal. There, you can see this.
Yeah.
Oh, we got the sponsorship.
I see a box.
Coming. It's Manscaped, our sponsorship that we're gonna. So everyone listening to this, exciting. We are gonna have a promotional thing where you can get this discount, this promo code, I should say. But first, we have to thoroughly test the product.
Yes.
So I'm gonna test it. I've
heard good reviews.
I've begun testing it already. We can actually see some of the results there in the background of Neal's screen. That's there's like some straggly. What is that in the background?
It's a decor item for a house.
Yeah, it looks like the remnants of my manscaping. So follow up for that promo code. What's going on, man? You're living large there.
Not too much. Yeah. So came down again. Planned community. Really beautiful. It's focused on it's a walking community. You park and then all the homes are dotted throughout. So I just like to come here, get a little relaxation in. Also want to check out some multi-units because I heard that there are some crazy deals to be had. But I'm not seeing them as much. As I run through the numbers, it doesn't seem as comfortably lucrative as I'd want it to be. Additionally, it's very predicated on Airbnb, which, yes, COVID's done, but who says there's not something else like that to happen again?
Yeah.
And they might not necessarily last 3 years, but it might last 6 months, which could be enough to put a building upside down, right? So,
yeah. I think if you do something like that,
it's also a very different market.
Yeah, I think if you do something like that, you have to first and foremost do it for yourself. Plan on spending a lot of time there yourself, and then effectively you've got to run the business almost independent of any of these short-term rental sites. You have to build a client base, like a repeat client base of people who go down every year, so that you can fill major parts of your calendar. Because I think you're right. If you're reliant on the short-term rentals for something as niche as hey, come down to this gated community in Costa Rica. It's a long trip to get here, and all these. It's going to be hard to rely on that. You have to want to do it for yourself first, and then maybe network or almost create your own little private timeshare. But listen, man, because the connection is not super great, and because we want to pound a lot of content through here, let's dive right into it. And I'm going to start with your boy. Okay. I don't know if you saw this because I know you've been living under a very nice rock down in Costa Rica.
I have.
But Elon was taken on CBC and said he wanted to identify them as government funded media or government-controlled media, state media on Twitter, to which CBC came back, and I don't know if they're thinking they're flexing or proving point. They're like, we are less than 70% government-funded. So Elon identified them as 69% government-funded. So Elon's taken on CBC. I know you love Elon. What are your thoughts on that?
I respect the fact that he just goes for the stuff. That's my biggest thing is the concept of just do it. Same thing with investing in any business. And he does it. It doesn't always mean it's going to be right. He's still a human at the end of the day. I did see, now you say that, I remember seeing a story about like state-owned medias, and it had like Russia, China, and like a couple other places in Canada.
Yeah,
in North Korea or something. And I was like, oh, that is an interesting one. And it is kind of funny that CBC came back and was like under 70%. And it's like, okay, so more than that's a majority.
Yeah.
If you said under like 50 or under 40, it'd be like, okay, like there's something there.
Yeah.
But as a majority shareholder, it's like, okay, so it's government run, and you probably couldn't make it profitable, so they sold some portion of it out.
And then it's also like, okay, so say it's 65% government funded, then the other 35%, it's a media company, so at the end of the day, the other 35% is advertisement. So like, and then the advertisers tend to target based on what the listening demographic or the viewing demographic is. So you do get some sort of potential positioning of that media source based on their funding, and then in turn the advertisers who want to be aligned with that, with that setup, right? So I don't know. I'm torn on this a little bit because I've liked CBC over the years quite a bit, and I remember when there's all these calls to defund the CBC, I'm like, I thought that's so ridiculous. But then the more you think about it, like, yeah, I mean, it's this great idea to have this public, unbiased, arm's length news source that unites a very large country that for a long time was very sparsely populated, and you couldn't get this source that was almost universal. But I think we've maybe outgrown that idea. Like, I feel like if we can support how many different sports channels do we have? Well, I guess we have Sportsnet and TSN. Like, if we can support 2 Sportsnets and like a bunch of other random, like, couldn't we support a national news? And I know other companies like CTV, they're producing national news at this point. And so I wonder.
It's also kind of, I think it's kind of, I bet you if you looked at the stats of like what some of the YouTubers and podcasts get for viewership on some of their episodes, if not a lot of their episodes, it probably outpaces a lot of what CBC has. So there's almost that part that maybe it doesn't have as much influence as we think.
Yeah, and it's probably dropping. I think they do so much good for the arts, though, right? Like, because with CBC and CBC2 on the radio, for example, and this is across radio, like there's certain quotas that you have to hit of Canadian content, but CBC obviously has way higher standards, and they hit so much Canadian content, which is a lot of money then generated for those artists. But even that, it's like, well, if you look at people who are involved in the arts, they tend to skew certain directions when it comes to their political, positions. Yeah. And so it does tend to have a left-leaning narrative. I mean, I feel like I'm tiptoeing around it, but like CBC tends to lean that way. And it gets perpetuated because then their audience becomes that. So then, they target content towards their audience, and then they support people in the arts, and the arts often do lean a little bit more left. And then even journalism in general tends to be a little bit left-leaning as it comes from art institutions and university. We've talked about university before and all this stuff. Anyway, it's interesting, but your boy Elon called them out, and it's all been pretty funny.
I wonder, it'd be cool to tie it back to us, would be look up how many like real estate based news articles and interviews in that ban was it opposing development? Was it opposing landlords? And some that also like explained how like versus like landlord costs that they're facing, or the permitting issues that are taking place, or like some of the public housing challenges that are going on. It'd be interesting to see how that impacts for our own knowledge.
I think it'd be great.
I might try and dig into.
Yeah, I think it'd be great if they had some sort of ombudsman or something that was arm's length that said, this is how the content of your media could be categorized. I think that'd be really interesting. And if we are going to have this, and if it is going to be taxpayer funded, I think that sort of transparency would be necessary. I find they've done a much better job of showing both sides of the real estate conversation recently than they had maybe in the past. And whether or not that's just realizing like, oh, we are under a bit of a microscope now, we need to be mindful of that. But I think some accountability there and some tracking of it would be super interesting. I mean, it's a very utopian idea. Like, if done correctly, a completely unbiased, representative, spin-free news source that just stated the facts would be phenomenal. But we know that like that's not very marketable. So they've got to preach to their audience.
I mean,
at some
that's the
point.
idea of like Twitter and YouTube and these things. But it's, again, everything, there's going to be some sort of bias with people that own it. And like, I was watching an interview regarding Twitter with Elon, and I think they mentioned that like he banned some people, and it's like, well, is that free speech again? Because now you're banning people that you personally don't like.
Yeah.
But anyways, if anyone out there has the knowledge or knows someone that does for data scrubbing, so that you can go through and pull all the articles, we could put together a little chart to show. I'd be super interested, just in general, to be able to do that.
Yeah.
Because it's very tough to obviously scan through and see everything when these websites now have gotten so large and there's articles for probably 40 years online.
Yeah.
But I would love to dig into that and just see what the overall sentiment has been. Because at the end of the day, fear sells. Like it always does.
Well, also, like I know because I looked into the possibility of even getting our podcast, maybe picked
on
up
CBC
on
podcast.
CBC podcast or something like that. And they're so focused on representation of a bunch of different things that really like financial and real estate and economics, no interest in it whatsoever. Other things, maybe more geared towards, mental health and, traditionally less represented groups, bigger business, right? Like bigger focus on that. And some of that is also what's already out there and what isn't out there as much, right? Like, so these are all well-intentioned mandates or quotas or whatever. Yeah, it's interesting.
Yeah. Elon's stirring. He's stirring
that pot. Other crazy news, and this is really important stuff, and we touched on a little bit on social media already, just to get it out there. Everyone expected the Bank of Canada to keep rates steady. The overnight rate stayed at 4.50. That was kind of the worst kept secret going. Like, they signaled that they were going to do that. The market was expecting them to do that. They said overtly that. Oh, is that a bird? A little bird tweeting in the background?
Did you hear that?
Yeah, heard a little bird.
Yeah.
Nice.
Yeah, the window's open in front of me.
I'll let you know when like a pigeon smokes the side of the building. That's what we got here. Or a seagull. So everyone knew that those overnight rates were going to stay. And I sort of wondered if they had a little inclination as where the StatCan inflation numbers were going to be, because that followed shortly thereafter, and inflation is down to 4.3%. Again, I don't know if you followed that, but that's
saw a little
significant.
Bit of that,
down from 5.2% previous month. So inflation coming in at 4.3 for March is pretty damn good. Bank of Canada has been very transparent about targeting a 3% inflation rate, and really what countries look for is inflation between 1% to 3%. That's considered sort of sustainable. And I thought they would never get to 3% by the end of the year, but damn, man, like we're here. That's only 3 months in, because it's lags by month. So we're 3 months in, they're down to 4.3%. And it's always interesting because now we have a state where like the inflation is less than the overnight bank rate.
Yeah.
It's sort of a tipping point, right?
I would think so. Yeah. It's also like there's downwards momentum now because they've sucked so much money out of the economy. And so even at this point, has it gone too far? We can't tell, because like we've always talked about, there's a 90-day lag.
Mm-hmm.
And so it's
or
like
more,
if
really.
we stay at the current pace, like we lost 1% in the last quarter or last 30 days.
Well, effectively the last 30 days, because it was 5.2 in February. Now it's 4.3 in March.
In a month and a half, technically we'd be at target.
Mm-hmm. Yeah,
we're lagging 90 days, so we could easily shoot past the target.
Right.
So it's like,
well, here's where
how do they balance that?
But here's why we're not going to shoot past the target is oil is back up again so far this month, and it was down in March.
Yeah.
And food prices are still running amok. They're still up like 9%. And that's pretty big. And the last one, and this is the ironic thing that I touched on really briefly in that short clip, but it warrants further mentioning. Part of the main component of these numbers, like the consumer price bundle and the core inflation components, are housing expenses. And that includes the mortgage payment. And so these higher rates have driven up mortgage payments, which in turn have raised average cost for individuals, which is being reflected in higher inflation. So ironically, these same interest rates that push down the economy over here and bring down inflation, there's also this element of it being pushed up because of the increased cost of running your household or living in your house.
And again, I think I've talked about it a bunch of times. But I think it's on a macro scale that's more applicable now, like what's going on in the global system versus what's happening in Canada. And I think it's more, again, a prop on the currency at this point than trying to save it, because it's like the housing market started to come back, it seems like, with a vengeance. And it seems like they could potentially start to reduce rates slowly, But I think there's probably a bit of fear there because it's like we don't want it to run off any further than it has.
Oh, totally. Yeah.
And then also, like, again, we need to try and keep the currency afloat.
Yeah, and I think they've sort of said, listen, we're not going to increase the overnight rate. We said we weren't going to, and we didn't, and we're not going to anytime in the future. There's not an immediate plan for it. But they're also not saying that sucker's coming down, right? So this overnight rate has dropped us from, I think the peak was like 9.2% or something, and we're now back at the same level of inflation as we were for August of 2021. So that's whatever, 18 months ago, right? So this amount, this overnight rate has results, and it seems like it'll continue to work in this direction if they just leave it as it is. To your point, they could overshoot, but I don't think they have much concern about overshooting. Like, we're going to run this sucker until we get it down, and then we might ease off the brakes or ease off the gas. So for those of you out there that have variable products, be it line of credit or your mortgage or what have you, I don't think we're going to see a change in the overnight rate this quarter. But I thought maybe Q4. It's now looking like it could be Q3 that they bring that down a little.
Yeah.
Right? Could be.
Yeah. It feels like it after holding steady twice. And like you said, numbers are reined in. I'm not always super optimistic. Like I said, I don't know that it's just purely like there might be bigger things at play. I'm just like in my head, I'm like, really, I'm like there might be something else that's going to be influencing it. Because again, there's so much stuff going
perspective
from a currency value and everything going on with the US dollar, the crypto world. Like I'm feeling disconnected right now because I've been about a week and a half mentally checked out. So I haven't been following the de-dollarization news that was coming out, but it definitely seems like there's something that's going to change in that world. And I think, I don't want to say it feels like they've already overshot, but I know chatting with a lot of people, everyone seems to be kind of feeling the pinch.
What I'm super annoyed by is like they did this one thing that was like super obvious. Like, all right, if we do this, we will kill the housing market, and that will, we'll kill people's net worth, and we'll kill their cash flow, and that will slow down a bunch of things. But they've done nothing specific to rein in food. Like, I don't know what the solution is, and I guess they're hoping that everything just kind of moves in unison. So damn, man, like we're getting still smoked on the food stuff.
Two things I want to mention on the food side. Like, I don't know agriculture. And again, this is something I'd want to do some research on when I'm back. But it seems to me like farming is in full blast right now. Like, I was driving through the countryside in Nova Scotia, and it seemed like every farm I drove by, the tractors were out. I could see people planting. I feel like I saw farmers walking the fields like in a quite like a more substantial amount than I usually would, like driving that same highway all the time. It is springtime, but is it?
I'm no farming expert, but I think you got to plant some seeds.
No, but my point was, is it an earlier spring? Is it an earlier spring? We didn't really have a winter this year.
Yeah,
like the ground's usually frosty. Like I've had snow on my birthday, and that's the end of May.
Right.
So like that's more my point. Is like are we having a warmer earlier spring, and it was a softer winter, so the ground didn't freeze as deep, so the frost is gone. Like even like the lakes this year, like
that's true, nothing froze
they
over.
didn't freeze, nothing froze over. So I'm like,
the problem is,
are we going to be able to start producing food real early? It's actually going to create like we're going to catch up.
But that's good for us here, micro locally. But let's be honest, man, we're not bringing those avocados and those bananas in from the Causeway. Right.
But it sounded like everyone had a warmer winter this year.
Yeah, I don't know.
Like talking to people all over the place, it seems. So I'm like, I'm with you that, but I was just like, again, don't know what the average time and they put stuff in the ground is, and I don't know what the turnovers are for crops. One other thing I want to mention regarding this in this thought process, for some of you guys that listen out there that know about CMHC MLI, that's where most construction, how most construction is financed. It's an insurance product offered by CMHC on the commercial side. For the construction of multi-units or the purchase of existing multi-units. And it basically allows you to insure your mortgage, so you drop your rate and you can extend your amortization. They've announced new rules coming in June where they've increased the cost of it by, I think it was 85 basis points. So let's say, I forget what the mortgage premium is now. So let's say mortgage premium was like 4%, it's going up to 5%. So the cost of mortgage insurance from CMHC on the commercial side is going up a substantial amount. Is that an indication that they're expecting the commercial market to like increase in risk? That's usually what a rate hike on something like that would entail. Mortgage insurance is completely priced based on a risk factor. So if they're then increasing their cost, they're paying out on some mortgages. And so is this an anticipation for shit to come? I'm not sure if you saw that release, but
no, I didn't. But that's going to be ruinous for new construction.
Yeah, it's going to be another hurdle for new construction, and that's why I'm like, why would they do that? If everyone knows that the house, well, see, and this is what I'm like, there's bigger force at play. It's like we need housing, but on the flip side, we can't, like, we're about to face a ton of payouts on mortgage loss because of where the economy sits.
That's what you think based on them.
That's what I'm thinking, and that's what that would indicate, right? Like when an insurance premium goes up, it means risk cost is going to go up. Let me double check. You still hear me when I open my emails?
I think so. Are you opening your emails?
You hear me now?
Yeah, I hear you.
Okay, perfect. So CMHC premiums are increasing by 85 basis points for all standard mortgage insurance, including students and retirement. So, and this is for premiums on CMHC standard rental housing, MLI Select, retirement, supportive housing, student housing, single room occupancy programs. So they're increasing that by 85 basis points.
Right on the rate, right on the rate that they're giving you.
Well, no. So on the cost of mortgage insurance, I think it's on that. So like mortgage insurance is 4% of your loan value.
Right.
Now it's gonna be 4.85. And 155 basis points for MLI Select loans. So you're going to pay 1.55% more on your MLI Select loan, which is what you would use. I'd say probably for definitely more than half of the market for construction out there to build apartments, if not
what was it before
70%.
What was the premium
I'd have to pull up the MLI Select premiums here, but I think they were in the.
What the hell?
MLI.
So
that's a big hike
for those of you kind of unsure like what exactly we're talking about. So one of the things that has been like pushed to try to keep housing more affordable is allowing people to buy existing stock with longer amortizations. And if the amortization is longer, that means the mortgage payment is going to be lower. And in exchange for this privilege, you have to then keep the rents or a certain portion of the rents lower, right? And this was viewed as a way to keep existing housing stock closer to what it had been previously from an affordability standpoint. And then from new construction, it's like, well, damn, it's so expensive to build new construction. You'd have to charge a fortune just to make it worthwhile. And it costs a lot of money in terms of down payment and all this stuff. Well, again, we'll amortize it over a longer period of time and we'll give you a slightly lower rate in order to make it feasible. And again, a portion of the new product will be affordable. But then that's all out the window if they start jacking the rates, like putting these bigger rate premiums on these supposedly discounted products. So again, these are things that were intentionally set up to try to help affordability and to try to help the construction of new stock while maintaining existing older stock. And there's just now this extra premium cost on it, which it was razor thin and very difficult to make these things make sense anyway. And now there's just that. But we'll have to unpack that again more in detail.
Yeah,
and that's kind of some nerd level stuff that not everyone's going to care about. But it's going to suck.
But it does
me.
apply for most people, even on the purchase of like a. Yeah. They're not doing single family homes, but everyone would know what CMHC is from a single family home. It's effectively a similar product for commercial, but they're now hiking that premium. I can't find the premiums here, and I think it's because there's so many variables that impact like location, demographic of who's living in there, affordability criteria. Like I think it's a very large wheel that has to go through to figure out, or grade at least to get the number. But regardless, 1.55 basis points or 155 basis points is a lot to add on to a loan if you're thinking it's $10 million, $20 million, which most construction projects at this point would be. Like a 30-unit building is going to be $10 million.
Yeah, all day.
So, yeah.
Jeebers.
Anyways, I saw that, and I just, again, my biggest thing to come out of it is obviously the cost sucks, but if insurance goes up in cost, that's an indication that risk is increasing and the likelihood of having to make loss payouts isn't going up. Is that already happening? I haven't seen it as much in the Canadian news that buildings are going belly up or construction projects are going belly up, at least not yet.
No.
Or is it that they're expecting that to take place?
I think to some degree they're looking at their exposure and like, well, damn, man, like these people are going to only have 5% equity in the property on the new construction stuff, or like 15% equity in, in a building at a time where rents are at an all-time high. It's like, what if rents dip? Right? Like that's a really real possibility. Like we went over these numbers last week. I think we're comparing, some of these rents around the world compared to what we pay here. And I've got some more numbers on that right now. Like there's a world in which rents start coming down. Ironically, by doing this and making it harder to build more stock, you're going to kind of preserve these high rents. And in Toronto, they just broke through the $3,000 threshold. Like the average cost of a purpose-built rental in Toronto now is over $3,000. So when I say purpose-built, I mean like not a basement apartment, not like a small little conversion, whatever. I mean like they built an apartment building, they put it for rent. The average rent in Toronto now just passed $3,000. And the studios,
insanity.
The studios now, the average rent for a studio is $21.24. A one bedroom is $24.84. The only units that have averaged under $2,000 in Toronto have been micro suites, which are under 300 square feet. Guess how much?
1957.
1993.
So
for a micro unit under, yeah.
The,
and those have actually increased in popularity. The smaller units, the smaller size units are actually seeing bigger rental increases more quickly than the larger units. Because
it's just the only thing that's affordable.
And again, we talked about this on our last episode about like, why are these units getting so damn small? It's like, well, that's actually what the consumer wants. And it helps the developer because again, the cost of construction going through the roof. So another thing that made me want to
I don't know what the people want.
Oh, sorry. It's not what's want. It's they're given two options. Like that's what they need. It's kind of like the option, the closest an option that could to be palatable. I saw another post where it said, we treat housing construction the same way we treat smoking. Like the government doesn't really want people to smoke, but they're like, all right, what we're going to do is if people choose to smoke, we're going to tax the shit out of it. So one, at least as they're smoking, we make a lot of money. And two, because, they put a drain on the healthcare system, we're supposedly recovering some of that. And maybe if we tax it enough, what'll happen? It'll discourage people from smoking so much. Pack of darts costs so much.
So we're just going to discourage people from living?
Darts. Well, 25% of the cost of a new construction building goes towards taxes. Maybe more.
Yeah.
Right? Yeah. So that's the sort of thing you do if you don't want people to do the thing they're trying to do. If you want to discourage someone from doing something, tax them 25%, right?
Yeah.
So why are you saying something like, all right, we want everyone to do this. We definitely want you to do it. We need it. Please do it. By the way, however much it costs you, we're going to need an extra 25% on top of that. And that's from your fees. That's from your actual, here we have HST, but your actual tax to do these sort of things. Upwards of 25% of the cost of construction. And this is money that otherwise doesn't exist, right? So it's not like the government needs this money because it's already in the budget and that fee has to be paid. It's like, no, some entity, some corporations or some individual wanted to build housing and they said, here's a new revenue stream. We'll take 25% of that in addition to the property tax we're going to take in perpetuity and blah, 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 blah. That's the sort of shit you do if you don't want the people to build the buildings. But don't we want them to build the buildings? Or do we want to continue to have rents at $3,000 a pop? I don't know. I can't tell sometimes.
Something that would be interesting to do, a lot of products do, but I know airfare, you pay your $350 and you get your receipts. It shows of that $350, base fare was $150. And then it says excise tax, airport tax, all the little taxes, and has them all broken out. And then you're like, oh, I feel a little less bad about paying $600. It's not Air Canada that's bankrolling here. It's all these taxes that actually cost me this flight. And be like, if you took your rent and then you gave the people a statement to be like, yeah, your rent's $2,200, but here's a breakdown.
Totally.
$200 is maintenance.
That's an
$400 is
idea.
property tax.
Start doing that.
$200 is insurance, and you break it all down. You're like, there's actually only 30% of this that goes towards a potential profit on a bill. You know what I mean?
That's not a bad idea. That'd be a fun thing to do once annually and just send out a letter towards every tenant. Hey, this is how much you paid through the course of the year. This is how much went to property tax. That's a pretty cool idea, man.
That would be one way. And then people would be like, wait a second, we're getting hosed. And then people will go out and be like, okay, I don't want to get taxed anymore. It's like anything. Anytime people can physically see the tax, then they're like, okay, I'm opposed to this.
And then maybe they might actually start getting angry at the government and being like, damn, man, you're taking. Then the tenant's going to realize that it's their money being taken for the property tax, right? And we talked about this before. We talked about this before. It's everyone's responsibility to pay tax in order to have everything that we have here. And the main way they collect that is through property tax. right? At the municipal level, you pay through property tax. And if you are a renter instead of a property owner, you still pay your fair share through the property tax, which, by the way, is kind of friggin' fair because you use the roads. Well, roads are provincial, but whatever. Like, you use all the amenities. So, but that would be, it would draw people's attention to the fact that, oh yeah, property tax went up and now I, as a tenant, have to pay more. Like, that is how that works.
Exactly.
Yeah,
and on new construction, imagine on new construction, they're like, okay, the house is listed for $699, and then you go to closing and they're like, actually, it's $805. And you're like, what? Wait, why? And you're like, I got to add the 15% HST on there.
Yeah, it would make
people
listed
be
like,
for seven. They're like $105,000 on a $700,000 house is tax.
Yeah,
like just straight up, and you're like, yeah. So the builder doesn't get that. Nope, it goes straight through.
I mean, the builder gets some rebates from it, but yeah.
But it's like it's not even what is it, a few percentage points on that.
No, it's crazy, man. It's crazy. So again, like, we treat housing the way we treat cigarettes. I thought that was a great analogy by someone. We tax them to try to discourage people to do it, and that's where we're at right now. In that same lane, though, BC is doing something really interesting, similar to what we're doing here in Halifax, and we talked about this a long time ago when there was the BC provincial election. So they have just done what happened here too in Halifax, where the province said, no, we run the show now. We don't care what you municipalities decide. We're making rules that are going to overrule the municipalities. And BC is effectively banning single family zoning.
Yeah, I mean I think that's kind of makes sense. Like, if you're building for all, like, I look at Montreal. Montreal is probably one of the more affordable cities in this country. And like, they have a nice mid-rise. Everything's like 3 to 6 stories as far as you can see, and it keeps a ton of availability. It you know what I mean? Like, that's the way in a lot of European cities. That's the same thing. They have a nice mid-rise. They don't have a ton of skyscrapers. They don't have a ton of single family. Then you don't create this like disparity and like polarization that creates the super high prices. So it's tough though, because like now it's like so late into the game where it's like you have a massive city built on the single family zoning, and now it's like you're gonna have tons of neighborhoods that were basically valued based on that kind of thing, and people are gonna come and be like, yeah, I'm gonna turn this $1 million house into a fourplex, which ultimately is actually gonna turn it into a $1.5 million house because an investor can make it into something worth $5 million.
That's the thing. Like, existing homeowners could actually benefit from this, but their neighborhood dynamics are going to change, and that's like, well, what do you prioritize? The neighboring dynamics of the existing people who have the good fortune to own a home, or trying to get more density? And they're basically saying there'll be no single family restricted areas. You'll have to do, you can do duplex, triplex, or even a fourplex in these areas. And you can do infills and townhouses and all these things. And the cool thing about that is, like, if you want to encourage families, right? I hate when people go, oh yeah, we need people in Canada because our population's not growing. The reason our population's not growing is because it's not affordable to have a family here, right? Like, that's the reality of it. And because we're like, there's only one way to have more people in Canada, it's to bring them here. It's like, there are other ways to create more humans. I don't know if you guys know about it, but it's kind of as old as time, and it's a lot of fun. But we actively discourage larger families here because it's so expensive. But this sort of rental product, which would be like the townhouse, or the 4-unit conversion, that maybe they're larger units, row housing, things of that nature, that's actually the hardest and most rare part of the rental market. Like, there is a shortage of all stock, but there's certainly more 1-bedroom apartments than there are 3-bedroom townhouses for rent. Right? Yeah. And which one is more suited to a young family trying to stay in the city?
Yeah, obviously.
Right.
Yeah.
So they did that in BC. At the same time, Toronto is doing a similar thing, basically getting rid of single family zoning in Toronto to allow for duplexes and triplexes and 4 units.
That's
and
good too, because it also brings down the barrier to entry for developers in some sense. Because I think, like, I saw a site in Vancouver sell the other day for a townhouse development. It was 7 homes in a row, and it sold. No, it was 5 homes in a row, and it sold for like $37 million. And they're all going to get torn down, and they're going to do stacked townhomes. And I was like, this isn't even for an apartment building. Yeah. Someone's splashed that much. But now it's like, okay, well, if I can do those everywhere, that $37 million lot might actually only be worth $20 million.
And also, I could buy one of the houses. I could buy one of the houses and do some of them instead of having to buy all of them together. And here in Halifax, we're doing something not dissimilar in that we've effectively said every house can have a secondary unit, We're still figuring out how to do it, but we're like every house can have at least one extra unit, and houses in areas that were typically 2 units can now automatically have a third. So we're like gently adding a bit of density. So to see this now happening across the country, and again, trying to fill that need. And I think what we need to do here more is allow for things like townhouses and stacked townhouses as of right, ready to go. In what people call traditional residential areas, because I think you could still take some of these larger lots and be like, oh, well, now you can do a duplex. It's like, man, it's a 10,000 square foot lot. How can I only do a duplex here? How come I can't, if I've got 100 feet of frontage, how come I can't do 3 stacked townhouses, right? Like, and have 6 units there. Like, why not? It makes no sense.
We talked about this before. Japan has more affordable rental rates than we do. And the way they've been able to achieve it, because obviously they have insane density, is no minimum size on lots. You just need 6 feet of road frontage to fit 1 vehicle.
Yeah, which is so hilarious.
So if you have 60 feet of road frontage, you can do 10 units.
This is the other thing where we're doing these half measures, and it's like, oh man, or do we rip the Band-Aid and just give her? And they're always like, oh well, infrastructure and this and blah 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 blah. But I don't know, man. We need to do some things differently. But the tax on building a place is, and now you're talking about the CMAC additional premium, it just means we're not going to get anything built.
No, the last thing I want to add to for consideration is there's probably some people when they hear this that are going to be like, this is terrible, because what it's actually going to do is make single family homes even less attainable. But again, we're in a constant growth mindset that rents are going to keep going up and vacancies in this day is 0. But eventually, these continuous changes in construction should turn over. And at some point, then if rents start to drop or vacancy starts to increase, it'll actually start to make these homes more affordable. Yeah. Because you know what I mean? That's what it ultimately is going to achieve that, right? Because I think right now it's gotten to the point where every time they've put something in place, it's like, great, so let's just make them even more expensive. Yeah. But ultimately it's going to turn the corner, but it's when is that going to happen?
That's the thing. It does have to turn the corner, because the same thing, if you could green light the construction of, say, 100 townhouses right now in our particular area, there's enough demand in the market right now that those 100 townhouses would probably be absorbed at today's prices, right?
Yep.
But, if you multiply that by maybe 300 townhouses, or look at, all right, after those absorb that alleviates a bunch of pressure, eventually it does come down, right? So while they sell the first ones at full market value, they sell the ones afterwards that they can't sell as much. We saw this. It didn't take much. All of a sudden, the new construction houses prices were coming down a little bit. It doesn't take that much, right? It happens fast. But we can't get out of our own way and get the stuff built. But anyway, it's frustrating for sure. But to see some of these municipalities do this, man, it's going to be interesting. It's going to be interesting.
I think it's super exciting. I love it. I think they should be doing it. And I think, ultimately, if people want single family neighborhoods, that's a pretty big luxury to have. Honestly, you go to any country in the world, it's a pretty large luxury to have, to be able to say that you just get to have some big single family space. And it's and for the people who well, that's a right. That's not very I don't even know what the word is. Yeah, it's not very effectively. You're just not thinking for anybody else. It's plain and simple, simply for yourself. And again, I know there's lots of things that we all do that are just for ourselves, but being I need to have a 10,000 square foot plot. I need to have a big house with all these things. Your footprint is enormous. You are not doing something that's sustainable at all for everybody else, whether it be sustainable in the sense of environmentally, or even just for people that genuinely live, as we're seeing. So I think that mindset kind of needs a change,
or move somewhere that's where less densely populated. You know what I mean? Go elsewhere, right? If there are pros and cons of living in a city, there are pros and cons. Yeah, right.
100%. So. And if you really expect to have that, you have to be prepared to whip out the cashola, because there'll be neighborhoods that'll maintain single family, because what you'll see people buy covenants of land, and, bare land condos. They'll make them exactly. It'd be bare land condos, and they'll be this cannot change because it's bare land condo. I think you see that actually in a lot of areas in the States. They'll potentially be gated, whatever it may be, and it'll keep them single family, and so it'll protect everything for you, but it'll be ungodly expensive.
Yeah.
So.
Right.
Anyways,
on.
I love it. I'm into it. I like it this way. And I think Montreal's such a vibrant city because of it.
Yeah. You keep young families and young people like in the core doing their stuff, and it would be great. Yeah.
So,
and I think also like there's this misconception that from a landlord perspective, like people we somehow like wouldn't want more affordability. It's like, again, affordability right now, you need high rents in order to afford the units. But if the units become more attainable, you don't need as high rents. Like everyone, like ultimately cash flow is what matters, which is why like we get these inflated wages right now because people need them to afford what's going on in the inflation world. Like if we could bring everything down in unison and still have people, you know, enjoying what would be, I guess, the normal profit margins, I think everyone would be on board for that. Like I would be very happy to go back to my rents 4 years ago, provided I also had like my rates and my expenses from 4 years ago, right? Like, and everyone was better off back then. This is why inflation is so ruinous, and this kind of brings us back full circle as to like, hopefully we're getting this inflation down a little bit. But I did want to finish on one potentially more cynical note with respect to that inflation.
My favorite.
Just ending on a nice cynical note. Like part of the reason our inflation is starting to look good is because everything was so bad this time last year, right? So to say we're only up 4%, 4.3% this March compared to last March, well, remember, last March was when things started to go crazy, like in every respect. So next month being, you know, when the April figures come out, we're going to look really good again by comparison.
The shit was really high last time.
So to be like, oh, we're only up 4.3%. It's like, well, because this time last year we had gone up 8.3%. So really compared to 2021, we're still up 12%. It's still bad, but it's just
ballistic.
It's bad at a slower pace. Be like, oh, I only gained 1 pound this year because I gained 20 last year. Like, is that good? Like, it's
95% less than last year.
Right. So this is where people who talk about inflation say at some point you just have to live with it and be like, this is the new normal. We've had this bump, and like with so many things, it's consistency. The dollar figure is almost moot because those things come out in the wash. Like inflation goes up, so everyone gets higher jobs, like higher paying jobs. It happens, and then the dollar's worth less, and whatever. We've just moved along on this weird parallel. But the predictability of 1 to 3% is manageable, whereas these big jumps are not manageable.
Do you think, sorry, this is just a thought. Do you think it's going to go full circle where we go back to more people growing their own vegetables, like doing more stuff at home that everyone, like I feel like everyone now pays for everything like service wise. They're just like, you get food delivered, pre-cooked meals, like food service boxes are crazy. Everything now, Manscaped, like it's everything comes on a weekly package on, but it's going to go back to like, I'm going to be buying one razor and milking that thing for 6 months. I'm going to be potentially growing some herbs at home.
Thank you for the
cheaper.
image.
I'm just throwing it out there. I couldn't do that. You look at this. We've already talked about this. This
you
connects
use
all the way
one
down.
razor a day.
I use one razor a day, and that only does like part of my face. But do you know what I mean? Like, are we going to go back to a time, not like full aggressive where we're churning butter out in the fields? Like, I don't think that, but I mean like, right? We've been living a very luxurious life where everything's been at our fingertips. We want anything, it's always at the store. It's always been semi-affordable. Like, this concept has been there. Is it going to go to the point where people are like, I can't just go to the store and pick up fresh basil, and maybe I might start growing a little bit of it at home because it's $9.99 for 3 leaves.
Yeah, but then you go and you're like, all right, I'm going to go to the plant store and get some seeds for basil. And you're like, what? It costs this much money to grow the basil?
They're more than the cost of buying grown basil.
Well, this actually leads, and we're going to wrap this portion of the episode. We're doing these 2 episodes a week now, as you guys know. Yeah. If you're into that format, maybe leave us a comment. A couple of you have said that you like it. We appreciate the engagement in the comments from our last week's episode and all that stuff. So we're going to keep it coming. But in the second half of this episode that comes out on Wednesday, we're going to talk about the declining quality of life ranking of Canada. I think we dipped. I've got the numbers here somewhere. I think we were 6th in the world in 1981, and now we're down all the way to 13th. And part of the reason is about inability to be competitive with our own domestic production. We're going to talk about that in the second half of this. That's something I know is near and dear to Neal's heart.
Yep.
We're also going to have our key player of the week, so follow up next time for that. And we're going to address a couple questions that you guys have had come in, including something about the recent rent eviction. Someone had a question because we were breaking down that model, and we might even see if there's another housing deal or a flip deal or investment deal that we can go over. But someone asked specifically about how that model works in an environment where rent evictions are getting a little bit more difficult. But you've got to...
Yeah, and I want to just add one other thing, too, is we have some exciting guests coming up. We're going to be covering stuff on solar, investing in the States. Also, our Vezi CEO to talk about RVs. We talked about it many episodes ago, and we've been trying to get them on, so they're coming on. So we have some really interesting stuff that I think will be applicable. Solar is a big one that I'm super interested in and excited to hear what they have to say. I think there's more rebates out now, and panels continue to get cheaper. Electricity rates continue to go up, and apparently it's getting sunnier every day too. So
we'll also update you with the discount code for manscaping, and we'll keep you posted on the progress.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.
Broke, I had rich habits. When I was broke, I had rich habits.